Hi everyone, we are live. My name is David Kosmider. I'm the creator of TimingResearch.com, and this is our show for October 20th, 2014. Today we will be discussing the 56th weekly report of the Timing Research newsletter. If you haven't had a chance to look at this yet, just go to TimingResearch.com/reports. And if you are new to timing research, we are building a crowdsourced sentiment indicator. Every week I send a quick 5-question survey to all subscribers, and then compile that data into a free report on Sundays. So today we'll be discussing the most recent report. I have 2 guests with me today, Sunny Harris of MoneyMentor.com and Roy Swanson of SteadyTrader.com. So, Sunny, let's start with you. If you could tell everyone a little bit about yourself.
All right. I've been trading for 33 years, and I started because I had a little software company. We created the first computer graphics software back in the 70s, and it's one of those garage to millionaire things. I retired at age 30, and I figured the thing to do then would be to give my money to money managers. That seemed like the smartest thing, since I didn't know anything about finance. So I gave a whole lot of money to managers. And the first week, no, so the first 3 weeks, they lost $75,000. So they wanted more money. They said they were trading something called futures. I didn't know anything about that. So I gave them another 50 grand. They lost that in 2 weeks. And I said, that's it. I'll never trade futures again in my whole life. That's it. So I went to the bookstore and I bought John Murphy's technical analysis book and started studying. And I got hooked. I loved it. And so I read more and more and more. And within, well, let's see, it started that in 1981. By 1993, I was #1 trader in the world, rated by Stark Research, and again in 1994, when I had a hedge fund. And I decided I didn't like hedge funds, and so I quit doing that. But I've continued to trade my own money. I've been trading, like I said, for 33 years. I invented something for my own trading called my dynamic moving average, and that is an average that calculates its own inputs based on the speed of the market. So instead of a 10-period moving average or a 200-day moving average, this thing calculates itself. And I use 2 of them together, and they cross over to give signals, but they don't whipsaw like most moving average crossovers do. This thing is amazing the way it just kind of floats right out of the way and doesn't whipsaw. So about 3 or 4 years after that, I decided I would create a channel around the dynamic moving average, which I did. And that's called Sunny Bands. And I've been trading with that now for about 15 years. And that's all I use. And I use strict technical analysis and my Sunny Bands. And that's all I need. So, oh, and I do give seminars. I do teach people. I do consulting. And I sell my indicators. So, and then my
Okay.
website, of course, is moneymentor.com.
Right. Okay. Sounds good. Thank you. Thank you for being here. And
Surely, thank you.
Roy, let's hear a little bit about you.
Sure, I've been trading for about 20 years, and for about the last 10 of those years, I did a lot of work consulting for a number of players in I call it the trading education space. And I started to realize at a certain point that, in my opinion, what I call the architecture of the markets has changed a lot. And I'm not talking about the crash of 2008, but I'm just talking about just the way stuff.
I can't hear him anymore.
Yeah. Are you still there, Roy?
It looks like we lost Roy.
Okay.
Is we
Oh
look
yeah.
for hello?
Oh yeah. You back?
Yeah. Oh, was I gone?
Yeah. You cut out there for a second.
Oh.
But, um,
So, well, let me start. What we do at Steady Trader is we look for what I would have to call black box algorithms to really try and focus in on what I call near period analysis, because I do feel that technology has fundamentally changed the architecture of how stocks are traded, really how everything is traded. And my frustration in years past was that there's, you know, too much long-term historical analysis, which doesn't seem to me to be as effective as really looking at near period analysis. So what we do at Steady Trader is we look around for really kind of cottage industry genius coders who have put together some great algorithms. And we've got 2 indicators on our site now that we do sell, and we also publish a newsletter. But everything is based, again, like I say, we are a bit contrarian because we look at very near period analysis, basically price pressure, and try to keep it very strictly to the what I call higher math. Again, I have a personal bias against a lot of these systems. People try to teach people ways where you use simple arithmetic to compute stock picks, and the way I look at it is if you could use simple arithmetic, we'd all be rich. But so our trading really does tend to be algorithmic based on advanced mathematics.
Okay.
All right, let me interject. I agree with that, Roy. I have a PhD in mathematics, and my Sunny bands and my dynamic moving average are complex math.
Right. Yeah, I think a lot of the industry is just focused to giving people what they actually are capable of doing, and then it makes them feel good. But hey, like I said,
Yeah, you're right.
It's hard. It's hard.
Oh, okay. Well, thank you. Thanks for being here, and let's go ahead and get started with the report now. I'm going to share my screen here, and as I mentioned earlier, this is the 56th weekly report, and it's available for download at TimingResearch.com/reports. So page 1 of the report always starts with the multiple choice questions, which are 2 and 3 of the survey. So this week, question 2 asks people if they think the S&P 500 is going to move higher or lower this week. And we had a very strongly bullish week. 61.4% said higher, and 38.6% answered lower. So let's start with Sunny. What would your prediction for this week be for the S&P 500?
Well, I think it's going to move higher, but not much higher than 1902 on the S&P. I've got what I call an attractor, which is attractors to me are support and resistance, moving averages, and extremes of my indicator Sunny bands. So I draw orange lines whenever I see an attractor, and I've got one at 1902, as I said, where it's heading right now. So I think when it gets there, it's going to play around for a few days, just kind of sideways, and then we're going to go back down again. So for this week, I would say up slightly.
Oh, okay. Thank you. And Roy, what would you predict for this week?
I'm predicting down. Not a lot, but down slightly. The way I have to say, I'm not a big one on predicting big market indexes because we always look for the opportunities, and I think there are always opportunities in any market. Obviously we know that, but for the S&P index as a whole, I tend to look at it kind of, I call it a kind of an arbitrage view, and I look at what makes up the S&P. I look at a number of ETFs and the stocks that make up the S&P, and I'm seeing a 70% down ratio on what makes it up. So I'm saying it's going to go down a little.
Oh, okay. And question 3 of the report asks people to rate their confidence in their guess, 0 to 10. This week we had an overall sharp drop in confidence, but the average for all guesses was 5.807, while the average for higher guesses was 5.886, and the average for all lower guesses was 5.682. So actually slightly higher confidence for the higher guesses for the first time in several weeks. Sonny, let's start with you again. What would you say your confidence in your guess would be?
I'm going to go with that average only because my indicators show me that it's moving up slightly to that attractor I mentioned, but I don't know if it's going to take a couple of days or the whole week. It could take 3 days to get up there and then crash back down to the lower attractor so that the week would be down, net down, although the first 3 days, say, or maybe even 4 days would be slightly up. So I'm going to go with that 5.8.
So, okay. And Roy, what would you rate your confidence at?
Well, I'm running again. I track this. I'm running at about a 77% accuracy rate, so I'll go with that. But I think as Sonny's sort of intimating too, these are choppy times. I was running 85% up until a few weeks ago, so even my accuracy level's down a little bit. I'll stick with what my reports show, which is 77% confidence in the accuracy.
Oh, okay. Thank you. Okay, so moving on, the bottom of page 1 of the report always shows the full history graphically, and then page 2 of the report shows the full numerical history and accuracy. And then starting on page 3 is the responses for the open-ended questions. Question number 1 is always the same each week. What developing events, technical or fundamental, will you be watching out for next week, October 20th through 24th, that might have a positive or negative impact on S&P 500 and other U.S. markets? So common ones this week, of course, were Ebola and Hong Kong and other events. Sonny, let's start with you again. Do you have anything else that you're watching for to happen this week that you haven't mentioned yet?
Well, David, I am so strictly technical, and I really rely almost 100% on my Sunny bands. So that's I really don't think that events really affect the market. They might very short term, but even when President Kennedy was killed, the market only jerked for about 3 days, and then after that it went right back to where it was. So I don't really think these events do much to the markets long term.
Oh, okay. And Roy, did you have anything else you're watching for this week?
Yeah, I totally am on board with Sonny. I'm totally technical. I try to pride myself on not reacting to the news. That said, our culture is becoming addicted to some of these stories, and the Ebola story, I think, just because of and I hate to use the word unprecedented because it's all over the media, but it is an unprecedented story, and it's capturing far too much attention. So I think there could be a blip up or down depending on what kind of news we get this week. It's hard to say. The other stuff, yeah, I mean, Ukraine, Mideast, it's not moving that quickly. Hong Kong, let's face it, I don't think that's going to have much impact. It's China; they don't mess around. They're not going to lose control of Hong Kong. But I think long term, and what has surprised me a little bit is that the announcement of increased military activity in the Mideast has not helped certain stocks yet. I think that will kick in. I've been a little surprised, but I guess they just haven't written the contracts yet. But if they keep running 20 bombing runs a day, orders are going to start to pile up, and I think we'll see some I hate to say it, but more is always good for the economy, and we'll see some near-term good effects from that. But probably, not this week. Not this week.
Well, let me interject here. The media is a 24-hour business nowadays, and they have to come up with something to say
Right.
all the time, all day long, and they harp on subjects. This Ebola thing, I'm I'm sorry, but it's not that big of an event. It's a few people in the United States. It'll be contained. There won't be a problem. Other things are killing thousands and thousands of people at a time instead of one or two or three, but they keep talking and talking and talking about it because they have to fill the airwaves.
Yeah, it's a cultural thing. But if we weren't technical people, we'd be saying that the markets are always sort of psychosocial, and there's a case to be made for that. So
Sure.
Yeah, I saw a cartoon the other day on the internet somewhere of it was a guy eating a cheeseburger and drinking a soda and smoking and but then screaming about Ebola. Yeah. So yeah, like you said, definitely a lot of other things that people should be worried about that are killing a lot more people. So, okay. Right. So the question 4 of the survey each week is always something different. This week is HBO and CBS both recently announced online streaming versions of their content. Do you think this will inspire even more customers to drop their traditional cable TV subscriptions? Do you think Showtime and other networks will announce similar services soon? And actually, I just realized that was first part of that is slightly misstated because HBO has had their HBO Go service for a while, but it has only been open to people who have a normal HBO subscription. But now in 2015, they're going to open that up to anyone, basically. So I went through the responses and quantified them. And for the first question, do you think this will inspire even more customers to drop their traditional cable TV subscriptions? About 72% said yes, and about almost 28% said no. For the second part, do you think Showtime and other networks will announce similar services soon? About 88% said yes, and about 12% of the respondents said no. So, yeah, let's start with Sunny. What are your thoughts about this issue?
Well, this reminds me of the breakup of AT&T, the big monopoly. I don't know, 30 years ago, something like that, when they were just forced to let it go and let it open up. And I think the same thing's happening here with this cable network stuff. It's been a monopoly. It was the only way you could get some kinds of things, and if you wanted to watch one particular show, you had to buy a lot. Like, for instance, I'm not the least bit interested in sports, and if I want to buy a package, I have to always get the sports included and pay for that. And I don't think they're going to do that anymore. I think they're going to break it up and allow you to buy the things you want. You can get most anything you want on the internet. It's just delayed now. So I'm watching series a year behind. So I think it's a good idea, and I think it's going to continue.
Mm-hmm. And Roy, what are your thoughts about this?
Yeah, absolutely. I mean, I've actually been involved in internet publishing since 1996, and there was a saying back then which has held true for these past almost 20 years, and it's that you tend to overestimate the short term and underestimate the long term. So there's a lot of hype about this week, but the fact is the horse is out of the barn with the internet. The internet is going to be the mother of all media, or whatever you want to call it. So yes, traditional cable is going to migrate more and more to this model. How soon it happens, I don't know. Will customers drop their traditional cable? Not immediately, because as Sonny mentioned, they have a monopoly. They've got everybody sewn up right now, so people are not going to just all of a sudden drop their cable. But we'll look at the landscape 2 years from now, and what seems like a news story is just going to be the way it is. And I think we'll have just probably a couple dozen services like Netflix and this HBO where you can just sign up a la carte and really customize your television experience. So like I said, it's a question of what do you mean by soon, and how many customers will drop traditional cable. But it's happening, and this is the trend. I mean, this is the future. You got to hand it to I think Yahoo saw this really early on, even though they got pummeled for it. But Yahoo's been trying to do their own television programming for about, I think, close to 4 years now, and bit by bit they're getting some traction.
Yeah, I was going to say, I wonder why it took them so long. Netflix streaming service has been around for 7 years now, and Hulu.com has been around for 7 years as well now. The industry, there's so much complaint about pirating, but they're 7 years behind the industry.
Yeah.
So, and it probably could have happened before that, even if they had recognized where the industry was going sooner.
Yeah, I think this story of the week kind of underlines the story of the summer, where there was a little bit of a brouhaha about is the internet free? Will we have some pipes faster than others? Will the who is it? Is it the FTC? Whoever regulates that?
Yeah, the net neutrality issue.
Right, net neutrality. So but you can see, I mean, this is what's going on. There are going to be, as I say, dozens of major players who want fat pipes to deliver TV and movie quality experience, and things are going to change. I can't really predict, but we know it's coming, and it's here actually. So.
Yeah, definitely. All right. Well, did either of you have any other comments you wanted to share for the show?
Well, I don't have. I guess my overriding comment. You asked what's going to happen to the S&P next week, and I'd like to expand that a little bit and say what's going to happen in the next several weeks. I have a daily chart that I was looking at to give my prediction for this week. I have my sunny bands on a weekly chart, and the weekly chart looks like we're going to drop down to 1850 pretty quickly, even though we're going to bounce up in the short term for that overhead attractor. We're going to bounce back down to 1850 with an attractor below and exactly where the lower sunny band is. So I think that's where we're ultimately going over the next few weeks.
All right. Okay. Yeah.
I mean,
thank you.
I would say that sounds very reasonable to me from what I'm looking at. I don't think we're in for a huge crash, huge correction. I think this is kind of a good sort of, as they say, quote unquote, healthy correction. I do feel it's going to moderate, and we'll probably have another uptick towards the end of the year. But obviously what's going on now, I think, is going to continue for a few weeks.
Okay. All right. Well, that's it for this week. I want to just remind everyone to go to TimingResearch.com/current survey before next Sunday to fill out this week's survey. And I want to thank my guests for being here: Sonny Harris of MoneyMentor.com and Roy Swanson of SteadyTrader.com.
And thank you so much, David.
Thanks for being here.
Thank you, David. And David,
thank you for having us.
Can I ask you one last question, David? Just occurred to me. Sorry.
Sure. That's all right.
Do a PS to the ending, but clearly the markets have been in this sort of uncertain territory now for several weeks. Has the accuracy of your crowdsourced prediction changed, from where it was, let's say in August or whatever, September? Has the accuracy level of your crowdsourced guesses changed at all? held up? Has it gone up or down?
It's it's been about the same. It's at about 40% overall accuracy, 42% or so. But I've mentioned this a couple times recently. I'm now that I have over a year of data, I'm analyzing that data and finding certain situations, like depending on the sentiment and confidence levels, where it's more accurate than other times. So that's one of the things I'm going to start incorporating into the reports soon. Is more of a forecast or something that that shows like under previous conditions that were similar to this, this is what happened. Whether those are times that were highly accurate or very highly inaccurate. So, I mean, an indicator that's always wrong is just as useful as an indicator that's always right.
That's so true. That's so true.
It's a bear fund, huh?
What was that?
It's a bear fund.
Right.
Yeah. So.
That's great.
So yeah, I'm just gonna try to use that data to find situations that to make more accurate forecasts and probability.
Well, as I said the last time I was on, I love what you're doing. I think it's one of the most original ideas to come out in a long time, and I'm really looking forward to see how it shakes out as you get a big data set and you get sort of real metrics on the accuracy of it.
Well, thank you. I appreciate it. And thanks for.
All right. Thank you, David. Good to
Right.
good to talk with you too, Roy.
Yeah, nice meeting you, Sonny. Bye-bye.
Bye-bye.